Imagine that this is a bug and that is a windshield. Boom! We know which one of the two we're going to give, and it's definitely not going to be gold. It's going to be the dollar. And that means that sooner or later this thing is going to die, or it's going to need to be revived in a different way. A reanimated corpse of the dollar. And we're going to talk about what that means and how gold will play a role in that. The big gold revaluation. Can Trump do it? We'll explore that notion in this video as we explore. The dollar is destined for continued failure. It has been a failure since the inception of the Federal Reserve Act of 1913. There's a member here from Von Gray's, Matthew Pippenberg, who has written a piece about this and makes this correlation between a bug and a windshield, racing towards a windshield. Gold is the ultimate stable store of value, we know, but we look at it sort of as a windshield compared to a bug or multiple bugs, and all fiat currencies will run into it. It will not give. Obviously, a rock is much harder, but, some people call this a rock, a worthless rock, a pet rock. Well, you know what? I'd be much happier with a pet rock than fiat currencies any day of the week. So what is the questions that we got to ask ourselves before we get to a revaluation of gold? When we're not at war, the U.S. is running essentially a debt-to-GDP ratio that we've not seen since World War II. It's in the 120% ratio. So where's this emergency? Well, a lot of it stemmed from the pandemic. But of course, since then, we've not been able to pull back much of the currency that has been printed. And the liquidity that's been injected into the economy since then, and that's a big problem. We already had a big problem before when we look at the M2 money supply. And so this appalling turning point, because the U.S. has been getting debt drunk essentially for decades. It keeps on rising and rising and rising. Ever since Nixon took us off the gold standard in August of 1971, and the politicians have been buying temporary prosperity, debt-based growth, and dupe voters by taking U.S. public debt levels from $248 billion in 1971 to $37 trillion and counting today. The number is staggering. And, we know that the difference between billions and trillions is not merely alphabetical. 1 billion seconds ago, for example, places us in 1997. But 1 trillion seconds ago places us at 30,000 BC. So when you look at that and the comparison between the two figures, it really is something that needs to sink in. And the rest of the world is shocked too. Now, the rest of the world too is also doing much what we're doing, but it explains why central banks have been quietly net dumping U.S. treasuries and adding physical gold to their central bank vaults since 2014. And of course, we know what happened in 2022 when the freezing of foreign exchange reserves of Russia, it accelerated the distrust of a now weaponized world reserve currency. That's the dollar. That has led to de-dollarization. And that is something that we're seeing from the BRICS coalition. Every time they've been meeting, there's been talk about how they very well are very close to coming up with their own alternative to the SWIFT system, and even some have theorized that we could see a gold-backed BRICS currency. I think that's still a pipe dream, but it's something that they would like to do. But nonetheless, the dollar certainly is under stress right now, and the world sees it. That's why it is slowly degrading, and that's what de-dollarization is. And the trend took off around the very same time that the Bank of International Settlements, which is the central bank of central bankers, officially classified gold as a Tier 1 asset back in April of 2019. And so we've seen a lot of central banks continue to stack gold, but not us. Here in the United States, we've held the same amount of gold here, 8,133 tons, if you believe it's actually there. If such a sign of U.S. dollar and debt woes and distrust were not obvious enough, the COMEX and LBMA exchanges are out of New York and London have been scurrying like headless chickens, because they're trying to find enough physical gold to meet delivery demands to get the gold off of these exchanges, which since 1974 were once derivative schemes used to manipulate rather than to deliver gold. But the hidden fact and implications were far simpler. Counterparties to this legalized price-fixing scam now want their actual gold more than their paper contracts. And some of that has subsided since the tariffs eased, as concerns eased, but still, it is a problem for sure. And, we saw what was happening. We're getting away from the petrodollar system, and faith in the U.S. dollar-driven future is openly in decline. But there's some that are defending the dollar, and they're in denial to an extent, a quick and a right to remind the world that no other nation or currency could beat or replace the mighty dollar. It is the world's reserve currency. It still holds the majority position of global FX reserves, and neither China, Russia, nor any other nation has a reputation or bond market to replace the dollar. But gold's future is something that is going to be the one alternative that could be a challenge against the dollar. Nations like China and Russia aren't trying to replace the dollar with their ruble or yuan. They know they can't. But what they're doing is they're replacing the U.S. dollar with gold. This doesn't mean a gold-backed world reserve currency, just a gold-based world settlement system. In China, they have no problem devaluing their fiat currency when measured against gold or any asset they've been quietly stacking and misreporting for decades in a chess game of common sense as the U.S. plays checkers with quantitative easing. Nor does China have much love for U.S. treasuries. And we've seen that. They've definitely decreased their holdings. China continues to pair gold to the oil imports from Russia and Iran. And in just over a decade, China's gold-to-oil ratio was over 8 barrels of oil to 1 ounce of gold. Today, that same ounce of gold buys China 50 barrels of oil. And meanwhile, China has no problem seeing its yuan price of gold rise from $7,000 an ounce in 2014 to $24,000 an ounce today in renminbi. So the yuan has collapsed against gold, but not against the U.S. dollar. But China can live with this for the simple reason that it sees gold-based New World Order, and it has been stacking the gold for many years. In fact, I talked about that in a recent video. There has been a rumor circulating that China has been seizing gold from private vaults. I'm going to post a link to that video at the end screen here, so make sure you check that out. Very important video where I give you the truth about what's going on there. So because of the Bank of International Settlements, the International Monetary Fund, and the BRICS Plus nations see a world in which gold is superior to the debt-discredited U.S. dollar as a strategic reserve asset. So now, what can the U.S. do because of this? Now that we're seeing this background and what's going on, what can happen? Can they revalue gold? So what options do the U.S. have? Ultimately, there's no easy solution or good scenarios left. The modern monetary fantasy, or solving the debt crisis with more debt that is paid with essentially mouse-clicked money, has been tried in earnest since quantitative easing runs took the Fed from a pre-08 balance sheet of $800 billion to a 2022 high of nearly $9 trillion. And no, the U.S. is faced with solving its debt crisis, and the bond market at the expense of its paper dollar is running out of time, options, and global patience. So what is the answer? Is it more war? For Hemingway, at least the most obvious next step is further currency debasement and war, which in the past, current, and even future headlines seem to confirm from the Middle East to Eastern Europe. But with distrust in U.S. politics and foreign policies, rising alternative media platforms highlighted left and right scandals on everything right from Russiagate laptops to Epstein cover-ups, trust in D.C. is falling. And so what about the Doge cuts and tariff walls? Well, that's put other complications in this. So now the only other option is not just financial repression that's occurring, but a gold revaluation. So the Fed's recent May 2025 manually open hints toward, I call it the red button option, or the radical gold revaluation, to effectively use a precious metal rather than fiat currency to achieve QE-like monetization without having to issue more unloved U.S. treasuries. But one can read the Fed's lengthy May report, but the Fed's speak boils down to this. The Fed can add gold certificates to its balance sheet, which can then become assets to the Treasury Department's TGA account to pay down a sliver of its $37 trillion public debt. But the trillion-dollar question remains, how will these $42 gold certificates be revalued? Well, there's 81,000 tons of gold. The current spot price would give Uncle Sam $850 billion in instant new money to pay off some debt. It's nice, but hardly a solution given the aforementioned 120% debt to GDP ratio. What if the U.S. government put a bid in for $20,000 gold? This would create a new price floor for the precious metal while simultaneously placing newly revalued gold certificates ahead of U.S. Treasuries and mortgage-backed securities on the Fed's balance sheet. It may sound crazy, but if you read the May report, they hint at such a balance sheet example, but shy away from naming a new price valuation on the gold certificates. So this means we can only guess of what comes next. But desperate times require desperate measures, and there is nothing more desperate than the USA balance sheet on its own current form. An emergency gold revaluation of $20,000 is just one example. Perhaps even lower, perhaps higher, that would create instant trillions in liquidity to address Uncle Sam's otherwise mathematically unsustainable bar tab. Such a measure would buy time for the U.S. IOUs and votes for belligerent White House. Such considerations, once thought extreme, must now be considered with desperate seriousness in a backdrop of only desperate options. Nixon made a radical change in 1971. Can a red-button gold revaluation in 2025 or 2026 be equally ignored? So we got to see. That is quite possible, but I don't think necessarily it would lead to $20,000 gold. I think, in a sense, it would be a revaluation of the dollar to gold. And maybe that revaluation may be closer to this, where this coin right here might very well may be worth $20 again. Yes, that's another, maybe even more extreme example. More likely, it might be maybe a combination of both. I don't know. But to revalue gold at $20,000 per ounce would be a radical move, not only for the United States, but around the world. And I think likely probably would wreak havoc in the markets for sure, especially if it's done in such a radical way, because Nixon taking us off the gold standard really was just the final nail in the coffin to an already declining gold standard, which started really in 1933. Let me know what your thoughts are down below. Make sure to check out the video about China and their gold in the comments, in the description, or up here at the end screen. With that, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.